If you're nearing retirement and want to minimize your capital gains taxes, you're probably already looking for ways to protect your wealth and keep more of it for yourself and your loved ones. Capital gains taxes can eat into your hard-earned savings, especially when you start cashing out investments. But don't worry. There are several strategies you can use to legally minimize those taxes, and I'm going to show you exactly how. Before we dive in, if you're serious about protecting your wealth and securing your future, click the first link in the description for a free Gold IRA guide. Thousands of Americans are opening Gold IRAs to protect their savings. If you have $100K or more in an IRA or 401K, or even up to $5 million in savings, this could be a game changer for you. Now, let's get into it. One of the most effective ways to minimize capital gains taxes is through tax-advantaged accounts like IRAs and 401Ks. These accounts allow you to grow your wealth tax-deferred, meaning you won't pay capital gains taxes on the profits until you withdraw the money. So if you're holding a significant amount of investments in these accounts, you're already ahead of the game. But what if you want to withdraw or sell some of those assets before retirement? This is where strategy comes in. First, consider spreading out your withdrawals over multiple years. By strategically selling assets at different times, you can stay in a lower tax bracket and avoid the higher long-term capital gains tax rates. Another strategy involves offsetting capital gains with capital losses. If you have investments that have gone down in value, you can sell those at a loss to offset any gains you've made. This is known as tax loss harvesting. By selling losing investments, you reduce your taxable income, which ultimately lowers the capital gains taxes you owe. But be cautious. It's important to follow the IRS's wash sale rule, which means you can't repurchase the same asset within 30 days of selling it to lock in a loss. Next, if you're over 65, there's a tax benefit that applies to the sale of your home. If you've lived in your home for at least 2 of the last 5 years, you can exclude up to $250,000 in capital gains, $500,000 for married couples, from your taxable income when you sell your home. This is a powerful strategy that many retirees overlook. Another option, if you're looking to diversify your wealth, is investing in a gold IRA. Unlike traditional investments, gold IRAs allow you to store precious metals like gold and silver. Not only are these assets a hedge against inflation, but they also grow in a tax-advantaged way. If you have more than 100Ks in your IRA or 401K, or even if you have 5 MALs plus in savings, a gold IRA could be the perfect tool to help minimize your tax exposure while protecting your wealth from market volatility. And let's not forget about gifting. If you're planning to pass down your wealth to your heirs, you can do so in a tax-efficient manner. The IRS allows you to gift up to $15,000 per year per person without triggering the gift tax. By giving assets away while you're alive, you reduce the overall size of your estate, which can lower the capital gains tax your heirs will owe when they sell those assets. Before we wrap up, another way to minimize your capital gains taxes is through charitable donations. If you donate appreciated assets to a qualified charity, you avoid paying capital gains taxes on the appreciation. You can also deduct the fair market value of the donation, which can lower your taxable income and reduce your overall tax liability. It's a win-win for both you and the charity. Now, if you want to get serious about protecting your wealth in the next 2 weeks, be sure to check out the free Gold IRA guide in the description below. This is especially perfect for American retirees with 100K or more in their IRA or 401K, or even if you have 5 MALI plusers in savings. By following these strategies, you can significantly reduce your capital gains taxes, making sure more of your hard-earned money stays in your pocket. And remember, a gold IRA might just be the best option for securing your future while minimizing your tax burden.